our futures desk thinks we're looking at probably 63.80 on Brent, 63 on WTI, 65 on Brent, because literally if you look at other bear markets, they've lasted about 140 days. We're there now. We're there in terms of the size of the sell-off, in terms of percent. So I think we're kind of reaching bottom because the fundamentals are not terrible. Despite the North American story, we don't have a huge overhang. It's about a 1 million barrel overhang at the moment.
And how nimble do you think we are here in the U.S. of pulling back in terms of more production so that it's really, so that by 6 months from now, this supply story won't be the same?
Well, if you look at U.S. production, about 25% of U.S. production requires an oil price of about $70. But the problem is the lead time is about 9 months before you actually start shutting in. But I'm looking at the rest of the supply complex, and that's where I think you start to see barrels come off. Libya came back on in a big way. Nigeria came back over the summer. That was 1 million extra barrels at a time of soft demand. Those two countries could fall back off, and you could have instability in other key oil-producing countries.
Did RBC at 90 or 95, did you write anything or say anything about a drop below 70?
I don't think, to be fair, I don't think a lot of people saw this.
No, I know, but did anyone?
There's certain people, and I'm going to give credit to certain analysts who have said from the beginning that the North American story would usher in a significant bear trend.
The people that said it wouldn't, and I can name names that said that said it's going to be a false idea that supply is going to get to the point where it offsets the rising demand every year. And I know them because they come on all the time. And at 90, when it went to 85, they said the market doesn't understand the fundamentals.
But you know what I think, though? There was a perception, and I think this is where, I have to say where I got it wrong. I believed early on the Saudis would defend a floor because I looked at their expenditure and I thought, gosh, Naimi, the Saudi oil minister, has been talking for the past couple of years about $100 being the floor. And then I remember sitting next to a former CEO who said, look, the Saudis are always slow to cut production. Why did you think they'd come in immediately? So I think a lot of us were looking for an OPEC response initially.
But we're at 64, what are we at, 64.80, and you say the low is 63.80? You're giving it another $1, so if it goes to 55, you're going to miss this too, right?
Well, we could, absolutely, but we're just looking at historically. And then I go back to sentiment is really negative right now, but how much spare capacity do we really have out there? We're at about 3.5 million barrels.
I don't know what the inherent value really is. I don't know.
But if you had one supply shock or
what if 100 was an OPEC a cartel price? What if it was all along?
I don't think it was a cartel. What it was 3.5 million barrels of unplanned outages. Iran sanctions, Libya falling off. That's what supported the market, was historic highs in unplanned outages. We started to see those come back over the summer.